Welcome back, guys, for another YouTube video. Happy Monday, everybody. This is going to be an important one, setting you up for the week ahead. It's going to be very technical, this update, but pay attention, guys, because I'm going to be providing some alpha, hopefully, in this video. We're going to really look at Bitcoin technically. We're going to start on what we've been talking about in regards to a pushback in the form of a relief rally that I think is now looking like it's came to an end. I think that really Bitcoin's had the bulk of the pushback that it's going to give. And we are going to be focusing on the technicals, like I say. But we're going to start things off by looking at the week ahead. This week is going to be extremely volatile, and it has everything to do with the economic data. I find myself in a bit of a weird situation as a crypto trader that's very price action orientated because, you know, last week I found that I had a number of long setups that got invalidated due to the core CPI, the producer price index came out on Thursday. It came out slightly hotter, which put a bit of a bid under the dollar, and crypto had a bit of a slam down as a result of it. So I find myself in a very tricky situation as a day trader trying to trade this market. Because it's so skittish around these sort of data events. And this week is going to be phenomenal, guys, in terms of economic data. So today we have the UK GDP. I'm going to be looking into that. That will already be out now. Tomorrow is going to be absolutely massive as we got the US CPI print. The expectations around about 7.6. The prior one was 7.7. This is going to move markets. And we're going to drop down the timeframes and show you sort of what I'm looking at moving forwards. No longer interested in taking any longs at the moment, really just setting up for shorts. And I'm actually going to be looking to ride the volatility most likely down after potentially a push up on the US CPI print. But I want to bring in the S&P and a number of other things. It's a very in-depth Patreon weekly meeting. For anybody that's interested in joining my Patreon, it's well worth it, guys. If you want to be serious investors, the Patreon, in my opinion, is definitely worth it. If nothing else, then for the weekly meetings, because we go over some amazing stuff which we're not going to cover in this update for the YouTube. So tomorrow is going to be huge. It's the US CPI print. Expect a lot of volatility. Then Wednesday we've got the UK CPI. We've got a rate decision from the Fed coming out at around about 50 basis points expected. And then it's not over then. So this is going to be volatile as well. The UK print's going to affect the dollar. Then on Thursday, we've got the Bank of England rate decision and then the ECB, the European Central Bank rate decision. So we've got 3 days of intense data coming out that's going to affect and play havoc on the markets. Now, where's this going to put us in regards to where we currently are? Let's just start by doing some technicals on Bitcoin, and then we're going to look at the S&P, which is something we've spoke about and how it's now potentially on its leg lower. If you look at the VIX, you can partner this up and it will suggest a similar thing. And then we'll talk about the dollar, which is looking rather weak today, but I think the dollar is likely to get a bid. And it's going to be probably as a result of all this economic data. Remember, in the US, the inflation numbers are set to and have been trending down, but in places like Europe and the UK, they're still high, and actually in some cases putting in higher highs in terms of the inflation numbers that we get, which could see the dollar catch a bit of a bid. I think there's a lot of things going on. I don't want to spend too much time getting into sort of the broader landscape and the financial fragility that we're seeing right now. But let's just get into some Bitcoin technicals. So quickly, keep this in your mind, guys. On Tuesday, we've got the CPI print for the US. Then Wednesday, we've got the CPI print for the UK. This is going to affect the dollar pair. This is actually expected to rise. And then we've got the FOMC rate decision, so the Fed's rate decision. This is Wednesday. And then Thursday, we've got 2 rate decisions from the Bank of England and, of course, the ECB. And we've got a number of other data points that, you know, these are the main ones that we've sort of highlighted. So let's drop down to the hourly. Let's look at the current structure that we are in. So this was the FTX spill after grinding along. Now, this was a weak spill given everything that happened, and I think there's a real lack of bid in the markets right now. However, I think there is going to be further deleveraging in regards to the crypto space, further liquidity pulled out of it. And essentially, we had this structure, okay? Now, we were looking for the shorts here. We shorted down to here, and we said, actually, you're going to get some sort of relief here. It's natural. You're right at support. Nobody's going to want to short that. And then we basically chopped the chart up into levels that we were looking for, levels to hold to expect continuation, and levels to invalidate to expect down to expect invalidation in regards to this move up. So we have been And we still are holding support. So this is going to be pretty tricky because essentially getting rid of these levels now that we've sort of, we worked our way up. We said, okay, you hold here, you hold here. Okay, we've invalidated. Let's not look for any longs until we reclaim. You holding this support. And you've just sort of staircased up, if you will. Now, I still think that there's the possibility of potentially one last hoorah here. And I think this may come in the form of tomorrow's CPI print, which may cause markets to look like a bit of a heart monitor. Okay, this is a common reaction that we've seen. So in regards to the structure that we're currently in, the reason I'm not looking for any longs at the moment is because it's not trustworthy. This is not good risk to reward for me at the moment. And essentially you are in some sort of broadening structure and you're losing this midline. So you can, just like you can chop up a horizontal range, chop up falling wedges, and you can look for areas, you see you're holding this trend line, you come below it, you fall to the lower one, you repush, you come back, hold it, you're looking for continuation, below, okay, and now you're actually falling it and you've broken this lower trend line. So maybe some sort of a retest before then continuation to the downside, or potentially what you may be looking at, and then we're going to go over to the S&P and the dollar, is on a CPI print, maybe it's favorable to the markets and we get some sort of a pop out the top here, running into this resistance, which is where I'll look to take things short. If I can get some sort of a setup like this, guys, I will be taking it because I am, and we have always been, even though we said you're going to get a short-term rally, which we've had. If you look at a number of altcoins, they've done significantly better than this, some 30, 40% up. We've always been, in terms of this being a bear market, very much on the side of this continuing to be a bear market and actually going to get worse as we fall deeper and deeper into a recession. With my Patreon yesterday, I looked at the fact that BlackRock were expecting 2-point-something fall in GDP, which was needed, they reckon, to get inflation back in line. That is going to come in the form of pain across the board. And it all has, BlackRock were very much saying, look, the Fed are determined to take markets lower and to continue to be restrictive, and now we're at a stage where recession is very much foretold. So we're not actually in any trades at the moment, just simply because once bitten, twice shy with this economic data. It's hard to position into a CPI print because you get lots of volatility going into it, and then you get an explosion in terms of positioning on the other side. And often that positioning will be, or often the price action will look to hunt liquidity to the upside before taking it to the downside. So this week is really going to center starting off tomorrow on the CPI print, and then we're going to get the UK CPI print, we're going to get a rate decision, and then on Thursday we're going to get multiple rate decisions, which is going to have bearings on our market across the board, and actually some rather unexpected ones. So we are looking for imminent downside. Now, we did an entire video on the S&P where we looked at, look, you're now at this stage where you're now starting the next leg low. We even said you're going to have a bid here based on your 30 daily MA, I think. We looked at this and said you're going to get a little bit of resistance here, but it's going to very much start the next down leg. I looked at this chart and I said it can't be this simple, but if we actually overlay the VIX, potentially, not the VIS, the VIX, which is the volatility index for the S&P, You'll see the correlation here is when the VIX is at a high, markets at a low. When the VIX is at a low point, markets are a high in the short term. And this is now trending up, which sort of cements the fact that, look, this is coming lower. We looked at Mike Wilson from Morgan Stanley's comments on Monday, essentially saying that we are now looking for that downside, or not looking for that downside, but he advised his clients basically to take off longs as a target had been met, which was this top trend line. And now they're looking for that downside continuation. So this obviously factors over to the crypto market, which will go with it. And there is the structure there to suggest that that is the case in regards to this rising wedge. And it's really going to be a case of, I think you're going to have a pop up the top, and then you're going to look for downside. They're going to run stops. They're going to run any stops that are up here. All this liquidity is going to get taken. Maybe you get a little bit of liquidity that's taken over here, and then you're going to see that downside. This is what we're looking at, ladies and gentlemen. So we're no longer looking for any longs. Our short-term long bias, short-term, we gave it a time period of 3 to 4 weeks. So when we talk about short-term from this, we are only talking and it has been just under 3 weeks. So we're about spot on with how long we thought this rally would go on for. When we're talking short term, we're only talking very short period of time. So the S&P looks like it's ready to roll. The gold's had an absolutely amazing run. But this looks like potentially it's looking to top out. It's running right into resistance here. It's struggling. Maybe there's some sort of a cup and handle structure here. But more than likely, this is going to roll with everything on the back of bad news. The dollar is being somewhat weak. This is a pullback, a well-needed pullback for the dollar. And it's my opinion that this reasserts and continues to go higher. And I do think you are going to get that. And it's probably going to be on the back of data. Maybe it has a little dip. It does the opposite to what Bitcoin does. So if we've got this rising wedge for Bitcoin, you know, Bitcoin's sort of grinding up, coming along, holding, it's now falling below. Maybe it pops up. Well, the dollar may be looking to do the opposite. Maybe it pops down and then reasserts. And you can see how it's putting in these marginally lower lows now. A lot of the momentum's been taken out the move. And people are going to look to take the dollar long again, in my opinion, after a well-needed and well-rested pullback. Couple that with the S&P. We're saying the S&P is going to go down, so that means dollar will likely go up. But obviously in the reverse rolls, it's the dollar that really moves everything. And Bitcoin's on that ledge, if you ask me. So you are now prepared for my scenario forecast, what to watch for. So a lower print for the CPI may catch a bid, but I think what people are underestimating is the reasons why we're getting lower CPIs, because we're seeing lower GDP in terms of growth, and we're just seeing destruction across the board. It's going to be an absolutely volatile week, ladies and gentlemen. Stick with this channel. If you're not already subscribed, make sure you hit that subscribe button, because we'll keep you informed on a daily basis about how we're moving forwards and what we're looking for. We're going to do a lot of videos on altcoins, because altcoins are now looking to me like they are on their next leg lower. And a lot of the ones that we're looking to accumulate will be potentially covering on this channel. So that's all I've got for you. Not interested in betting long here at all. You know, maybe there's a scenario where you do something like this. You come and claim all this liquidity before taking it to the downside. I think that's unlikely. I think more than likely you may get some sort of a pop, and then you're going to take this straight down. And this is going to, if you do get a pop to the upside, maybe a lower CPI print, people will be looking to really aggressively take that long, even though the reality is the macro situation is extremely bleak and set to get worse. And that's without any sort of geopolitical or sort of fiscal risk that I think people are underpricing. I think there's huge risk to the markets right now, and we're just waiting for that Lehman's moment of March 2020. We're waiting for that Lehman's moment or another March 2020 moment, which will see capitulation throughout markets. And then maybe we get our feet back under the table in terms of actually investing. But we're out in terms of investment. We continue to stay out. We'll try and trade whatever up and downside we get. But right now, no interest in taking this to the upside, even though you could potentially say that there is not such a bad risk to reward with where you currently are, depending on what your risk appetite is. You know, depending on where you want to take this, you could definitely get some R's out of this. But for me, once bit, twice shy, I know what this economic data does to the markets. It will send them haywire, and I'd rather sit out of that, wait for a trend to be confirmed, or look to fade whatever move comes, and get that sort of more security in regards to that. So that's all I've got for you in this video, guys. We've done the S&P, we've done the dollar, we've also looked at Bitcoin and the CPI and all the economic data coming out this week. I'm going to love and leave you on that note. If you enjoy the content, a like is always appreciated, so is a comment, and I'll see you all in the next YouTube video. Thanks a lot for watching, guys.